The crypto market is on fire right now, with Bitcoin going below 100,000 and currently trading at 87,000. Everybody's in a panic trying to figure out, is the price of Bitcoin going to be going below 50,000? Is the whole hype about cryptocurrency done, or is this the golden opportunity we've been waiting for to be able to jump into the market at the best price and ride the crypto wave all the way to the top? My name is Kafiso Chidi, voice of the crypto. Stay with me as I break down the price of Bitcoin so that we're up to date and stay ahead of the curve. Alright, fantastic. Let's jump in. So, there's a couple of things that I actually want to talk about related to Bitcoin. Firstly, it's from a technical standpoint. Secondly, it's from a fundamental standpoint, which is the news related to the assets itself, and also the sentiment, which is what the people are doing, institutions as well as retail traders. I think that these levels of from retail trader, institution, and these are the most important people that actually move the market, because these are the ones with the most speculation, you know. And as we see, Bitcoin is becoming more institutionalized. More and more people are jumping in, but it has not taken away the volatility that comes with the asset itself, because we're seeing a couple of things that are very much evident throughout the cryptocurrency cycle. We see that Bitcoin starts off from a specific point, shoots up to a new all-time high, and after hitting a new all-time high, retraces so hard to an approximately between 70 to 80% of its initial gains before consolidating and going back up again. So when we see the movement of cryptocurrencies, or when you see this repetitive pattern every time when accounts are getting liquidated, we always think about the fact that it's not the end of the world, and the asset itself does have some actual benefits that it brings to the world itself. You know what I'm saying? So having that intrinsic value is very much important with the asset, and I feel that as we keep on going and the world is progressing, the need for cryptocurrencies is actually increasing along with it. So I'm going to be breaking down the price of Bitcoin because it's trading in a way that I think is very much exciting to me, and more or less has been following the narrative from it breaking this double top neckline to the way down here over here. All right, so there's a couple of patterns that I want to talk about now. First of all, is this channel over here. 1, 2, 3. We saw it trying to test this channel here, didn't actually test, then went down all the way down and broke this channel, and now as we can see, it touched levels of 80,000, and now it's looking at going back into this channel and potentially testing this line as its first resistance checkpoint. If this can provide a resistance, then we can see the price of Bitcoin potentially come back down into this purple zone over here, or we can see the price of Bitcoin break through the zone and shoot up. And once you see a shoot from this bottom part to the top part, it means that this was a fake out and we're back into the channel again. Okay, very, very exciting. One other thing that is quite important is the fact that once this market reached over here, which was over higher than here, it created a double top at this point over here. So we see market started from here, shot all the way up, got to a high, retraced down, did the double top, broke the zone over here, and started shooting down. So here is not only just the double top that has actually been broken, but there's a symmetrical triangle consisting of this line and this line over here. And this symmetrical triangle was giving the market some sort of a consolidation, as is deciding whether it's going to be hitting an all-time high, which is potentially going to 130,000, or it's going to be going down and potentially breaking and going the way down like that. And as you can see, the market did decide to go down, but it kind of made it a bit obvious if you can look at how the price actually moved, because with this pattern over here, the symmetrical triangle, there was a test over here, a test over there, okay, a test over there, second test at the top, second test at the bottom, third test at the top, third test at the bottom, you see. And then there was an effort to go test this zone here for the fourth test over here, for the fourth test, but the market did not get here and ended up going back down again. Over here, this is lack of momentum to the upside. So this move over here, for the fact that it did not get to the top part of the symmetrical triangle, it shows that there's less bulls in the market than actually sellers, and more people are actually selling the asset itself. And you saw the price going even lower, and over here is more or less the best time to actually look at, coming into the market, cause now it is trading close to the neckline itself for this for this double top pattern. I know a lot of people don't actually trade double tops using necklines, which I don't really understand, because the neckline itself is more or less giving you a clear indication of a break of structure. Once the neckline actually comes over here, then you know for sure that the movement to the downside is more or less, there's more confidence about moving to the downside. Then what you do is you basically put your stop above the previous high over here and enter somewhere down on the neckline, somewhere here, enter somewhere here and look at a move to the downside. So now comes the question of, okay, if we're moving to the downside, where would the TP be? So the TP would more or less be you measuring the height of the neckline to the head or the double top itself. And as you can see, this is more or less what you're getting. It's from the neckline to the head. It means that we've hit our final TP. If we were to be trading a head and shoulder pattern, if we were to be trading, a double top pattern, this would be where our final TP is, because the width from the neckline to the head is the same as trading a head and shoulder pattern. If you don't know how to go about trading a head and shoulder pattern, I'll leave a link in the description, or click onto the last video that pops up after here. Okay. And then once we've reached our TP, now comes, okay, are we still in a very much bear market? I don't necessarily think so. There's a couple of reasons why. I'll show you. First and foremost, the reason why I do not believe that there's much bear movement, or the bears are still in control, is because from this last movement over here that we saw of BTC in April, which is the lows, we saw a shot up. And like we talked about the cycle, if you're seeing a pattern of retracement cycles, then more or less come to the Fibonacci, because that's the best tool that we have for measuring pullbacks or retracement. So we go to the Fibonacci and we put out the Fibonacci, and now that we have established that this is the highest top that we have, now we need to understand, okay, since this is the bottom, this is the top, then how far down did the market retrace from this all-time high? And we're going back to the narrative that we spoke about in the beginning of more or less crypto's retrace 70 to 80% of its initial pump itself. So this is more or less a theory that I have been, testing, and I've seen a bit of a pattern with it. Yours might be a bit different, but based on this, I'm more or less looking at how far along in terms of the retracement did the crypto pullback from where the pump initially began. So as you can see, it's around about on the 786 close to 80 mark, so it is actually done also, in terms of pulling back. So when you're looking at TPs of, reasons why the market is to go down, there's not actually much reasons, because the TPs have actually been hit of the structures that we're looking at over here, that we're playing out over here. So now, very importantly, what I actually looked at, I looked at retracement patterns, because if you're dealing with patterns that are retracement, then they will more often than not form retracement patterns. And with these retracement patterns, I'm looking at, okay, what sort of patterns am I actually getting that can actually help me, enter the market at the best place. Keep in mind, whatever that I'm actually doing here, this is pure speculation. This is me not giving you financial advice. This is not financial advice at all. Trading is very much risky, and the whole point of doing technical analysis, sentimental analysis, and any other analysis that you can do is to take the statistical trade, like the one with the best statistical chance of winning based on the data that you have. It's not even a matter of it being the correct one or not, but you only take the one with the most chance of succeeding based on the data that you have. So that's why we try to use the data that we have to make better trading decisions. But like we're human, sometimes it works out, sometimes it does not, and sometimes other systems work better than others. And you need to figure out what system you're going to be using to best get you the money. Alright, fantastic. So let's get into it. One of my favorite patterns that I actually do like trading when it comes to 5-point patterns is a bad pattern. A bad pattern is made famous by Carney, and he more or less teaches about retracement patterns ranging from ciphers to Gartleys to bats and anything in between, to butterflies. And there's so many 5-point patterns, but more or less the theory itself comes from Elliott, and his setups of M and W patterns. And as you realize in the beginning, that double top that we talked about, which is like this, sorry about that, that double top that we talked about, which was over here, that's an M pattern, you know. This is a W pattern. So Ralph Elliott is the one who actually, implemented the wave theory to trading. And we see a lot of wave theory that is being implemented as long as there's mass psychology. They more or less move as a big unit of matter, I would say. So anyways, long story short, Scott Carney took the concept and advanced it and actually talked about, he added Fibonacci ratios to more or less specify where the entries and exit points are. M and W patterns are very much discretionary, meaning that whether you enter or not is based on your discretion. But yeah, the M and W patterns, they're more like visual. So Scott Conley's goal was to more or less put numbers and concepts so that he can more or less know which I'm entering here, I'm exiting here, and this how much I'm risking, yada yada yada. Let's get back into it. So the bad pattern starts from here in April. Sets up one over here from April. We can't put this one in because this is a higher point. We got the highest point and a retracement which is not more than 0.5 but more than 0.38. So if you are looking at trading the bad pattern and you don't know how to go about trading the bad pattern, or this seems very much interesting to you, click onto the video at the end of this lesson and learn how to trade the bad pattern, because it's a very, very powerful tool that I've been using for years, and I think that it's one strategy that you can actually just trade specifically that and make some money from it, by spotting it out in different pairs and having your own confirmations and tweaks here and there. You can be a profitable trader with this bad pattern by Scott Conley. It is not by me. Credit goes to Scott Conley. Thank you very much. 5-point retracement pattern, which is a bat. As you can see, this is the 884 as it came over here. The final point is 895. This is very, very much important because when trading a bad pattern, the most important area is spotting out this PRZ, which is the potential reversal zone. Potential reversal zone. Potential. So it means that this is the spot where the market stands the most chance of reversing. Not that it's guaranteed to reverse, but this is where we'll be looking for any sort of reversal around about at these numbers. So these numbers go here. It's between 886 and 100%. I'm gonna draw this PRZ and then color it yellow. Let's use green. Yeah, let's use green. And yeah, this is the PRZ that we'll be looking at over here, and we'll be looking at any sort of rejection from here, and the rejection would be the first test, and 100% for this PRZ pattern will be here. Yeah, will be over here. So if the market is, so ideally what is actually being traded over here is this. If the market gets rejected around about at this point over here, just above 75, somewhere around 75 above here, we could potentially be going to see 115, and it's a decent size move with the risk to reward being very much controlled, with the risk to reward being very much limited. And the whole point of entering the market with the least exposure is so that you can do things along the lines of this. So this is where the final TP would be, and then you have a bit of a tighter stop loss. This is the best place of entering the market, but we're not guaranteed that the market was going to come back here. And as you can see, there's already been a push. It's been a push already of a solid green candle pushing the market back up again. So we can see some potentially, maybe this could be the rejection or we can see the market going potentially lower here. So if it was to go up there all the way, depending on where your risk appetite is, you can look at start entering trades in this potential reversal zone. But before entering the trades in the potential reversal zone, you first need to also look at confirmations. What sort of confirmations that you're using? What I usually do is also looking at this, you know, bad pattern, is to look for candlestick confirmation within the PRZ itself. So when the market gets to the PRZ, what sort of rejection patterns am I getting? I could find potentially could form like a head and shoulder pattern over here, could form a double bottom, you know, or a W pattern, and start shooting up. And then that's the confirmation that I'm looking for. But entering a trade in these PRZ, you stand a higher chance of being right as to just finding a normal head and shoulder pattern on its own, you know. Finding it within a PRZ, you stand a better chance of actually placing a profitable trade. So this is what I'll be looking at if the market does reject here. But since we are speculating and we are trading, we are not guaranteed of these results, and therefore we can potentially see the market tank all the way down, test here, have a bit of a play, and then violate the market, liquidate even more accounts, go further down like that. And the furthest that I'm looking at going with this market over here is potentially at this point and have a test of 57, and I think this is where people will be crying out loud. People will be crying out loud if the market gets here. Accounts like your entry have already been liquidated. We're seeing MicroStrategy is under discussion of being removed from the S&P 500, because you know they decide Michael Saylor is holding 100% Bitcoin. That's how much optimistic he is. You know, he's not looking at diversifying investment risk. He's very much doing the opposite, is putting all of his eggs in one basket, which is going against all sorts of investment practice that have been passed down. But if he used to get this right, he's going to be getting it right massively, and if he's getting it wrong, then he's going to be losing everything, you know. So a lot of his positions that are leveraged are getting wiped out as the market is retracing. But it's very important to understand these cycles, so that even if you're not going through leverage positions, you're spotting out the best times to enter and exit. You're not always going to get the time whereby you're not going to get where the market is actually turning, you know. It's close to impossible to do that. But getting it, like Warren Buffett actually says, buying an asset at the best price or a good price is fair enough. You can't get it at the cheapest. You can't be guaranteed that it's going to be the cheapest because of too many factors. But getting it at the best price or a good price is good enough. So that's it from my side. Like and subscribe so that you're up to date with content like this. You don't miss out. This is not financial advice. It's for entertainment purposes only. Hope that you enjoyed this video. Click the like button, notification bell. See you guys next time.